Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be considering one derivative of the stochastic. This is a stochastic fast indicator and as per the name you can figure it out that this indicator is a momentum indicator which is going to guide you with the momentum whether it is bullish or bearish. This indicator helps all the traders to figure out the momentum at the earliest, as that is the trademark of the stochastic. Compared to other indicators, this indicator moves quite closely with the price action data, as well as it is reliable. So we will see how we can take advantage of this stochastic fast indicator to look for opportunities which we feel are likely to have higher probability of ending the trade on a profitable note rather than on the losing side. But of course, it is not going to be all the time on probability side. We just want the probability to be higher than 50%, or even I think a probability of 60 to 70% should be good enough in should be considered good enough in any trading environment. So now let us head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. The stochastic fast indicator is mainly based on two parameters. The stochastic is made up of oscillator and the smoothing smoothing parameter. Let me change this chart to Euro USD. It was disconnected, now it has been reconnected. All right. Okay, let us change it to Euro USD, as that is the most traded currency instrument in the world, and most of the viewers are also likely to be much more familiar with the Euro USD price moves compared to Euro GBP. And I will change it to hourly time frame. The response time is a bit slower. I think that is happening because of probably lower net connectivity. So here we have these parameters in place, which I will remove, and we add the stochastic fast indicator. Here you can find the stochastic fast indicator either going through this list of momentum indicator. It is amongst the momentum indicator. Else you can simply do a quick search and there you will get it. So here it is. Below the stochastic indicator, we have the stochastic fast, or the other method, the much simpler method, is to simply do a quick search. So here we have it, stochastic fast, and compared to the stochastic indicator, the signal generated by this indicator are likely to be much sharper, much more frequent, and that is also expected given the name, the stochastic fast. So it is going to move much faster compared to the normal stochastic indicator, and this is derived using taking the closing data and comparing it over the recent price range. So we take this price range, we figure out where the close has been compared to that price range, and then we take the SMA of that oscillating price over 5 look back periods, and then we also take another factor, the fast percent d, which is derived using the value of fast percent k, which is simply the 3 period SMA of the fast percent k. So first we have to calculate the fast percent k, which I explained that it is simply the 5 period SMA of the oscillate oscillating price, which is derived using the closing price and comparing it with the high and low over that same calculation period. And then we take the SMA, 3 period SMA of that fast percent K to arrive at the fast percent D. Fast percent D is likely to move slower compared to the fast percent D, and when it moves, it is likely to be much more reliable compared to the fast percent K. So we consider both these output parameters, and only after that we take the trading decision. So I would like to give you some classical interpretation, some simple interpretation of how to trade using this indicator. The first thing we can use is its crossover. But here, as you can notice, that crossovers happen too frequently to be taking each single trade generated by this crossover structure is, I think, is going to result in too many trades being taken. And if not for losses, you are likely to lose money because of the trade cost incurred, as we will be taking too many trades, and that is of course going to rake up the trade cost. So that is one factor which we have to keep in mind while working with the stochastic fast oscillator. So here the strategy which I think is likely to prove much more reliable is to go for the divergence. And this divergence factor we had also considered in case of the stochastic indicator. Here you can simply see if the price action is dipping much further, but the crossover from lower side to the higher side is happening on the higher side. So we have on the price action the formation of lower low, but on the stochastic indicator the formation is of higher low. In that kind of scenario, I feel the signal generated is likely to prove much more reliable compared to what we might get when we are simply relying on these prior crossover structure. And in another scenario, we just can take the invert of this. So when we have the formation of higher high, whereas we have this formation of lower high on the stochastic fast parameter, we can go for this divergence on the sell side. We can try to go for short selling opportunities and look for some corrective move to happen, as we have these fast percent K and fast percent D values in overbought territory, and thereon we are trying to look for some correction and consolidation phase to begin. And a similar kind of strategy can be adopted when we have these output parameters below zero, below 20. The fast percent K and fast percent D had both dipped below 20, and now some sort of reversal is taking place from the lower side. So we have both these kind of possibilities which can be exploited simply by using this stochastic fast indicator. And also we can also look for some with the trend trading opportunities. We can go for these crossover kind of formation where we have these mid-range levels in mind. We can utilize the 50 as a critical marker. If we have the output of fast percent K and fast percent D above 50, then that is generally considered the bullish scenario. And if we have the output of fast percent K and fast percent D below 50, then that is generally considered bearish. So we have to get used to this idea also. I think this is also going to help you while making trading decisions. So when you are not really trying to exploit this reversal sort of taking place on the higher side or on the extreme lower, you can simply try to profit when you are trading with the trend. So in that kind of scenario, having a strong momentum in an indicator is going to be much more helpful. So you can pay attention to this parameter, and if we have this bullish crossover where we see fast percent K crossing above fast percent D, and at the same time both these values are in bullish territory, in that kind of scenario I feel a buy trade can be taken while simply keeping our stop loss closest to the nearest low, closer to the nearest low. And similarly, when we have bearish crossover and both these output values are below 50, in that kind of scenario, we can also look for short selling opportunity. So that is one way to utilize this indicator. Now coming to its customization parameters, let us see what kind of customizations we can go for when we are using this indicator. Here we just have to play around with these three parameters. You can mostly use this indicator with lower time frames. When you use the too elongated or too larger time frame, then the effectiveness of this indicator is lost. So if you want the indicator to be effective and not throw up too much of a lag between the signal generated and the price action data, then you can only increase this calculation period to not much high, only to some extent. So you can give it a try and see to what extent you can increase it. So let's try out a combination of 14 and 10 and see what kind of signals we are likely to see generated by this indicator. So as I have increased this calculation period to 14 to 10 combination, you can see that we are seeing significant lag, and the number of times this crossover is happening has also reduced significantly. So this is now going to be the norm. We will have significant lag between the price action data and this indicator signal. And if we increase it further, then this effect is going to get more pronounced. So that's why I said that this indicator works well, much well, when we have lower time frame for the calculation purposes. Now let me try out some other values, some higher values, to see what kind of effect we are likely to see. Let's see with the combination of 2418. Okay, so you can observe the smoothing factor is a lot more. Here we have this fast percent D value, which is moving in a much smoother manner compared to the fast percent K. But then the lags are going to be there. So here we have the crossover happening when there has been already a significant move, like in this scenario. That's why it is generally customized to reflect the immediate price data. Alright, so I will revert it back to the default parameters, and also we can play around with these different types of moving averages. The SMA is a simple moving average. You can try out all of these various types of indicators. We get different kind of results when we are using different types of moving averages. So here we have these KMA, MMA. So all these factors are there. So which kind of moving average you use generally is going to have a significant impact on the kind of crossover you are going to get and how much time lag is going to be there between the signal generated and the price moves on the candlestick pattern. Now coming to the output value, you can also go for different color combinations. If you are not really the fan of this blue green combination, then of course we have all these customization tools available to us. So suppose if you want brighter colors, you can always go for those colors, and you can also go for two different kind of combinations to reflect the trend up and trend down. So that makes it much easier for you to get these reflected, the price reversal reflected immediately whenever the turnaround happens. So that is one advantage of going for these two different types of color combinations working with these indicators. Now you can also go for different transparency settings if you want the transparency to be higher or lower. Okay. Now you can add some levels if you feel like. As I said, you can utilize the level of 50 to define the turnaround point between bullish to bearish. So 50 can be utilized as that kind of line. So here we have one more way to customize this indicator. Now coming to the last editing toolbox, we have some advanced customization options available to us. So if you want these output parameters, output values of this indicator to remain constant and not fluctuating depending on the applied price move. So in that scenario, you just have to opt for this recalculate on new candle only. So whenever new candle formation takes place, only then, only once, the calculation of the output value will be done and it will remain constant throughout the current candle period. You can also go for highlight the time period zone. So this is going to highlight the time period zone which is under consideration, which is under calculation. If you want to customize the calculation further, you can go for the instrument customization or you can simply use it from the chart. So whichever instrument is on the chart, for that instrument we will have this indicator plotted. You can also do similar kind of customization for the candle period. You can simply use it from the chart. So if it is hourly, then the calculation will be done as per the hourly. If it is 15 minutes, then the calculation will be done as per 15 minutes. Else, you can also hard code these candle period. In that scenario, regardless of what is the chart's candle period, the calculation will be done as per these predefined parameter of half an hour. So here, this indicator is being done, is being reflected with the each candle period being 30 for the calculation purposes, even though these charts defined candle period is of hourly. So this sort of customization is also possible with this indicator. Now I will restore it back to use from the chart. The side, spread side can be asked or bid, and there is going to be only slight difference, but directionally speaking, it will be on the similar trajectory. If you want the indicator to be available on all the candle periods whenever you change the chart, you have to opt in for this. So now here, as I change the indicators or charts candle period, this indicator, new indicator will be plotted as per the new candle periods for stochastic fast. Now it is being calculated as per 4 hourly candle formation. But if you don't really want this indicator to appear on all these different candle periods, suppose if you want the indicator to be available only on 4 hourly time frame, but you don't really want it on other time frames, for example 30 minutes or hourly, then you can go for that kind of option. Also you can add other indicators for different time frames, so you can customize this trading system where you can have different kind of indicator for different time frames, and then you can collate that data and take an informed trading decision. Okay, so here it is back as I have now again changed it to 4 hourly. Now I will revert back to the prior setting of show indicator on all the candle periods. So with this, we are, I think, done with this today's session where I have tried to explain to you various customization options, various properties, and the possible uses. Of course, the uses are representative. You can always come up with new types of uses, something new, something unique. You can always come up with that. So I have tried to cover some of the possibilities, and that can't be exhaustive. That can't ever be exhaustive for that matter. So for today's session, I am now signing off. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too for calculation and trying out various combinations. You can try out this platform, the JForex platform, JForex 4 platform, which for which the link has been provided in the bio. We are also available on the Facebook. You can reach out to us for any query, any comment